Good afternoon. George Cavaligos for HFT Bonds and Notes. That was a good day. Thank you, Lord. Had a couple things going on today. We saw a real nice sell signal on, I think it was on 30-minute, 10-minute, 15-minute, 5-minute charts, all of them this morning. As we sort of made higher highs, we took out last night's highs this morning in bonds and notes. We put up a higher high, and then we immediately reversed, and we saw increasing volume on the down trade, and that obviously signals to me that sellers are coming in there. Market started selling off a little bit. You know, the buyback showed up. We didn't really rally much on that. You know, the funny thing was early this morning we had bonds, notes, and stocks all up on their highs, and it looked like the bonds and notes were going to ignore the rally in stocks. Well, they ignored it at least until, what, the futures pit opening this morning, around 7:30, and then they stopped ignoring it, and the equities charged higher, and the bonds were weighed on all day. I've been talking about these reversal day trades over the last couple days. Friday was a bearish reversal trade. Stop above Friday's high, which was 24 in the 10-year, targeting Friday's low at 131.08.5. Well, the current low is 131.09.5. Darn, I covered too early. It was a good day. I'm not going to argue with that. Now I want to be looking to see what happens when we do meet that target. That's, you know, not necessarily says to get long at 131.08.5. It's just your first target for the bearish reversal trade from Friday. See what happens. What you want to do is when it hits 131.08.5, you're supposed to cover your shorts and look for, you know, either more follow through on the downside or some type of a bullish reversal trade from there. I'm getting a little antsy here about any kind of bullish trade. You know, we had that weekly reversal, I think it was 2 weeks ago, that targeted 131.29.5. That came after, you know, what looked like a very clear 5-wave move to the lows. And typically we go into a consolidation pattern. Consolidation patterns in Elliott wave, you all know, there's 11 different common corrective patterns. One of the more common ones is the 3-wave A, dip B, higher high C wave. I'm looking for that. One of the other common patterns is the triangle formation. I posted a chart in the chat room this morning. I hope you guys have figured out how to use that chat or the bond document viewer in the chat room. And the rest of you guys who are watching this video and aren't coming into the chat room, you're missing out on some great pearls of wisdom here, let me tell you. Alright, 131.04 on the downside is the trend line off of the recent lows, and around 142.10 in the bonds. That's going to be key. We want to watch how the market trades down there if we do get down to those levels. Right now I'm looking next trade. Alright, down to 131.08, down to 142.29. Those are the objectives of Friday's bear reversal, the initial objectives. At that point, we're supposed to cover shorts and start looking for bullish reversals at that point. 131.04 and 142.10 are the bullish trend lines that we've seen off of the lows of this whole move down here recently. If we start taking those lows out with volume, we're starting another leg down. I don't want to get there yet. The volume today wasn't tremendous. We did 969,000 10-years, but that includes yesterday's holiday short and trade too. So again, the volume was light. I'm going to maintain the stance that we're still in some kind of corrective pattern, probably going down in, you know, let's say this morning's high was the top of the C wave, and we're going down in a D wave now as some part of some bigger corrective pattern. And we could test those lows at 142.10 in bonds, 131.04 in notes. I'm not going to buy this thing until I see some bullish activity. The selling pressure has relented here a little bit as we're getting in close to the equity close. But, you know, the S&Ps are up 9.25. The NASDAQ is up, oh my God, let me see, what's that up, 17 handles right now. So the equity trade continues, and I keep seeing people on Twitter. I'm telling you guys, if you're not on Twitter as a trader, you got to get on there and build up a nice repertoire of people that are trading, you know, similar markets what you're trading, and try to follow what they're doing. There's always some good ones, and there's always some bad ones. And even the good ones get into bad streaks. I know I had a bad streak there for a couple weeks there as the market's chopped around down here. I'm not a good consolidation trader. I'm looking for trends. So, cover my shorts here. Look to sell a bounce tonight, I guess. You know, I'm highlighting the previous lows at 131.15. We'll see. Maybe we get up there. The Chinese have been quiet last couple weeks because of their Chinese lunar holiday. They did come back last night. Didn't see much activity in the Asian session last night. Hedge funds were getting whipped around in London this morning, but they don't have big positions. They are small long. Look at the commitment of traders data, and I'm getting a little nervous about the downside, but you know, maybe the small spec traders have it right this time. Dealers are small long. Small spec accounts are as long as they are in the last, or I'm sorry, small speculators are as short tenure notes as they have been since the last lows last spring in 2012. Those lows came in April, and historically that's when the bond market tends to bottom. You know, it's sell in November, buy in April, sell in January, February, and buy in April, and then sell your stocks in April and May and go away. So, okay, that's a lot of stuff. That was a good day. I'm take a look at it tonight. We'll see what if anything comes up. I'll try to post it on the Twitter feed. Have a great evening, guys. See you tomorrow morning in the email.